Okay, let's dig into this. We're doing a deep dive today, focusing on one specific source, a research report that just came out from Nuvama Wealth Research.
That's right. And the company they're looking at is Sky Gold and Diamonds, ticker SKY Gold Gold.
Yes, Sky Gold Dild. And our goal here really is to unpack what the Nuvama analyst found. We want to pull out the key takeaways, the big numbers, the insights from their perspective.
Exactly. Understand their view on how Sky Gold's been doing recently, what's pushing their growth, and what the future might hold according to the specific analysis.
And the report's headline kind of gives it away, doesn't it? Something like aggressive growth on track.
And cash flows to drive valuations. Yeah, it definitely sets a bullish tone, so we're going to explore the why behind that statement.
Okay, so let's jump straight into the performance because Q4 fiscal 25 sounded, well, pretty impressive for Sky Gold. What did the report actually say?
The results were definitely strong. And interestingly, they were mostly in line with, or even a bit better than, what the analyst was expecting. Consolidated revenue, get this, hit INR 1,058 crore.
Wow, okay, that's up 106% year over year.
106%, yeah, more than double.
That's huge growth. What about just their core like-for-like business, stripping out any acquisitions?
Still very strong. Like-to-like revenue grew 47% year over year, came in at INR 755 crore. So solid organic growth, too.
Okay, and how did that translate into profits? Did that flow through?
It definitely did. Gross profits surged 131% year over year to INR 82 crore.
Right, so gross profit climbing even faster than that huge revenue jump. That usually hints at better margins, right?
Exactly. Points towards efficiency gains or maybe a better product mix. And the operating picture was strong, too. EBITDA?
Earnings before interest, taxes, depreciation, amortization. Kind of core operational profit.
Right. That grew 149% year over year. Reached INR 63 crore.
Okay, again, growing much faster than the top line. There's a pattern here.
There is. And the bottom line, profit after tax, or PAT, saw an even bigger leap, up 180% year over year to INR 38 crore.
Okay, 180%. So consistently, profit metrics are outpacing revenue growth. That just screams margin expansion. Did the report confirm that?
It did, yeah. Gross margin expanded by 85 basis points compared to last year, hitting 7.8%.
85 basis points.
Yeah.
So almost a full percentage point improvement there.
Well, 0.85%. And the operating margin, the EBITDA margin, that expanded by a full 100 basis points year over year, reaching 6%. So yes, they're definitely squeezing more profit out of each rupee of sales.
Okay, very impressive numbers for the quarter. So the big question is, where's all this growth coming from? What did the analyst identify as the main engines?
Well, it seems to be a combination of factors. First off, just sheer volume growth. The amount of gold jewelry they actually produced and sold was up 53% year over year.
53% more kilos of jewelry.
Yeah, up to 460 kilograms per month, according to the report. That's a lot more gold moving through their workshops.
Makes sense. What else?
Part of that, the report notes, comes from consolidating entities they acquired, bringing that volume under the Sky Gold Birla. But it's not just that. They also benefited from, just strong underlying demand for gold jewelry in the market.
Okay, so general market tailwinds helping.
Right. And higher gold prices also played a part. That naturally boosts the average selling price per piece, which flows straight into the revenue figures.
So more volume helped by M&A, good demand, higher prices, a nice mix. But the report also seemed to highlight some major new client wins in fiscal 25 as being really important.
Yes, this seems crucial. They brought on some big names, CaratLane, Aditya Birla Jewellery, and Reliance.
Okay, those are significant players. Why are they so strategically important, according to the analyst?
It's about the business model, apparently. These large clients mostly operate on what's called an advanced gold basis.
Advanced gold, meaning?
Meaning the client CaratLane, for instance, provides the raw gold to Sky Gold. Sky Gold then does the manufacturing, the job work design, casting, finishing, setting, all of that, using the client's gold.
Ah, okay. So Sky Gold doesn't have to spend its own money buying tons of expensive gold up front for these orders.
Exactly. That's the key insight. It makes this whole stream of business incredibly working capital lean. They're not tying up huge amounts of cash or taking out big loans just to hold gold inventory for these clients.
That sounds like a massive advantage. It must really help their profitability and returns.
Precisely. The report emphasizes that. It directly boosts overall profitability and significantly improves their return ratios, like return on equity and return on capital employed. It's a smart model.
Fascinating. Okay, so these clients are a big deal. The report also mentioned exports growing rapidly. Is that becoming a significant factor too?
It really is. Exports are becoming a much bigger piece of the puzzle. In Q4 fiscal 25 alone, they contributed 85 crore rupees,
Which was what percentage of the total for the quarter?
about 8%. And for the full year, fiscal 25, exports grew, wait for it, 201% year over year.
200% growth in exports. Wow.
Yeah, and that meant exports made up 9% of their total revenue for the full year. The analyst actually expects that figure to settle above 10% in fiscal 26 and sees exports as a major volume driver going forward, medium term.
Is there any specific export deal they mentioned?
Yes, they highlighted an order from a distributor in Malaysia. It's potentially for up to 200 kilograms of jewelry per month, and importantly, it's also on that advanced gold basis, which is great for Skakeldy's working capital.
And how much are they supplying to Malaysia currently?
As of the end of Q4, they were supplying about 60 kilograms a month against that order, so still room to ramp up there too.
Okay, so growth is really firing on multiple cylinders. Volumes, prices, these strategic new clients, and booming exports. Now, thinking about profitability again beyond just selling more stuff, how else are they boosting margins and efficiency according to the report?
Well, we talked about the margin expansion. Part of that is attributed to a favorable product mix. They seem to be selling a higher proportion of value-added products.
So more intricate designs, maybe studded pieces, things that inherently carry better margins than plain gold chains, for example.
Exactly. Selling more of the better stuff, profit-wise. And then, as we just discussed, that working capital lean business from the big new clients like CaratLane and Aditya Birla Jewellery, that doesn't just drive growth, it directly helps overall profitability and return ratios because they need less capital tied up to generate that revenue.
Makes sense. The report also mentioned something about their strategy with gold metal loans, GMLs. What was that about?
Yeah, that was interesting. It shows some active management of their financing costs. The report notes they actually surrendered their GML facility previously when the borrowing cost shot up apparently around 9% because of supply chain issues messing with rates.
Okay, so they stepped back when it got too expensive. But now,
Now they've started using GML again because the costs have come way down. The report suggests they expect it to normalize around 3.5%, and management has apparently set a goal to increase their GML usage significantly, aiming for maybe 80% by fiscal 26.
and why does using more GML at this lower rate matter for the bottom line?
It's expected to give their pay-T margin a nice boost. Basically, instead of funding their gold needs with more expensive debt or equity, they're borrowing the actual metal at a much lower effective interest rate through the GML.
Right, lower financing expense flows straight to profit.
Yeah.
Smart.
It seems like it. And based on all these strategies, the client mix, the GML, the product mix, the report, sets some pretty ambitious targets for future profitability.
What kind of numbers are we talking about?
The analyst is projecting their PAT margin to reach 4.2% by fiscal 27. And maybe even more significantly, they see return on equity, ROE, hitting 28% and return on capital employed, ROCE, hitting 31% by FY27.
Okay, ROE and ROCE, just quick refreshers.
Sure. ROE is basically profit generated relative to shareholders' investment. ROCE is broader, looking at profit relative to all the capital used, debt and equity combined. Both measure how efficiently the company is using capital to generate returns.
And those projected numbers, 28% ROE, 31% ROCE, what's the significance there?
According to the Nuvama report, numbers like that would put Skakeldy at the very top of the gold jewelry sector in terms of return ratios. It suggests the analyst believes they're on track to become exceptionally efficient and profitable compared to their peers.
That's a bold call. High efficiency, high returns. Okay, so let's pull this all together. What's the overall future outlook and the valuation perspective coming out of this report?
Well, based on everything we've discussed, the strong performance, the growth drivers, the efficiency moves, the analyst has significantly bumped up their forecasts.
How big were the upgrades for, say, fiscal 27?
For FY27, they lifted their revenue estimate by 4%, but the profit estimate saw much bigger jumps. EBITDA forecast up 27% and PAT forecast up 28%.
Wow, those are hefty upgrades, especially on the profit side.
Yeah.
What kind of growth trajectory does that imply over the next couple of years, like the CAGR from FY25 to FY27?
The report projects some really eye-popping compound annual growth rates. Revenue CAGR projected at 46%. EBITDA CAGR at 56%, and PAT CAGR at 55% over that FY25-27 period.
46, 56, 55% CAGRs, those are seriously aggressive numbers. What gives the analysts the confidence they can actually hit that?
The report really leans on the impact of those new major clients. They expect those clients alone to contribute something like 20% of total volumes. And because that business is so capital efficient, it provides a strong anchor for achieving those high profitability and return projections.
And is the company standing still, or are there other moves planned?
Definitely not standing still. The report mentions a couple of key things on the horizon. One, they're looking to get into the lab-grown diamond or LGD space. They expect that to start gaining traction in maybe 3 or 4 quarters.
Okay, diversifying into LGDs. What else?
And this is big. They're planning a major capacity expansion, like 4 to 5 times their current capacity. They've apparently already acquired the land for this expansion.
4 to 5 times capacity expansion plan. That's huge. Now, are these future plans, like the LGD entry and this expansion, already factored into those bullish forecasts we just talked about?
That's another interesting point. The report explicitly says that a recent acquisition they made, a company called Ghana N Gold Private, has not yet been factored into these estimates.
Okay, so those already strong projections might not even fully capture the potential impact from that recent deal, let alone the big capacity jump or LGDs down the line. So bringing it home, what's the analyst's final recommendation and price target?
They've maintained their BUY rating on Sky Gold D stock, and they've significantly increased their target price, raising it from INR 450 previously to INR 550 now.
And how did they get to that 550 target? What's the valuation based on?
It's based on applying a price-to-earnings multiple of 25 times their forecast for FY27 earnings.
25 times future earnings. What does that multiple tell you?
Well, a multiple like 25x definitely suggests the analyst thinks the company deserves a premium valuation. It reflects strong confidence in that aggressive growth continuing and in those profitability and return improvements actually materializing.
And compared to where the stock was trading when the report came out, what kind of upside did that 550 target imply?
At the time, the report mentioned a market price of INR 393. So the INR 550 target represented a potential upside of about 40%.
40% potential upside. Okay. And the core reasons driving that BUY rating and confidence.
The report really emphasizes the management team's execution ability. They point to the track record of delivering on aggressive growth, especially in the FY24-27 timeframe context mentioned in the report. They see the sustained aggressive growth combined with improving efficiency, making Sky Gold a, quote, long-term growth story.
Right. So wrapping up this deep dive into the Nuvama Wealth research report on Sky Gold and Diamonds, the analyst paints a picture of, well, really aggressive growth that seems to be on track.
Yeah, driven by those key factors we unpacked, landing big clients with that capital light model, the surge in exports, and smart operational moves like managing GML costs and improving the product mix.
All leading to projections of much better profitability and return ratios, potentially best in class in the sector, according to this analysis anyway.
And we've tried to lay out the specific numbers, the drivers, and the outlook behind that view straight from the source material we had.
Which leaves maybe one final thought for you, the listener, to chew on. Given the management's execution track record that the report highlights, and the fact that major future steps like the Ghana N Gold acquisition getting fully integrated or the big move into lab-grown diamonds aren't even fully baked into these already bullish projections, what extra potential might that unlock for Sky Gold down the road? Something to consider.